strong indications of a very positive trend evident in the share price movement of Automotive Axles Limited. The share price moved downwards into the bearish zone in January 2024 after a stay of almost 2 years. The share price managed to move out of the bearish zone with 50 EMA cutting across 200 EMA to move upwards. The share price of Automotive Axles is following a very positive pattern, being placed above all exponential moving averages of 20, 50, 100 and 200 days, and is equally supported by adequate market volumes. The price positioning portends a significant growth potential with the expected impressive delivery in top and bottom line in Q4 of FY26. Over last 12 months, while Nifty Auto has delivered around 26% of appreciation, Automotive Axles has relatively lagged behind for a major part of the year but has a decent annual growth of around 17%, which is quite promising. Market price of Automotive Axles has recently moved up to rupees 2007. Price earning multiple has accordingly gone up to 19.4 times. P multiple has incidentally moved above the 5-year median but still stayed attractive as compared to industry average of 27.8, while the price at about 3 times the book value is a constraint. The company is also at a disadvantage from the viewpoint of price earning growth ratio due to lower growth in profits over last few years. Automotive Axles Limited, a success story of over 45 years, a joint venture of Kalyani Group led Bharat Forge and Meritor of Cummins Inc., a grand coming together of a strong local manufacturing base and global technical know-how. A company with an annual revenue of over rupees 2000 crores, a small cap company with a market capitalization of about rupees 3000 crores, a major part of product mix that's over 80% catering to medium and heavy commercial vehicles MHCV segment. Capacity utilization consistent and strong around 80%. Sells directly to original equipment manufacturers from current year onwards, which is a margin accretive step in the right direction. Ashok Leyland alone accounts for more than 50% of revenue. Automotive Axles also supplies to other OEMs like Daimler, Mahindra and Tata. Regular plowback has boosted equity over time. A debt-free company for over 3 years now. Other liabilities quite normal in growth. The total assets being largely funded by equity, going up to around 76%. A strong liquidity position and also a great potential for borrowing in the long run for growth. Profits in the last 18 months have been on the lower side. With equity growing on the strength of retained earnings, the return on equity has fallen sharply. Although a level of above 15% looks decent, it is low as compared to the recent past. A similar impact is felt on the return on assets as a product of lower profits and growing assets. In spite of being relatively lower, both return on equity and return on assets reflect an acceptable level of management efficiency and effective utilization of capital, profit before tax for the trailing 12 months is lower compared to the last 2 years. The reason for the PBT fall is the exceptional provision of rupees 12 crores in compliance with the recent labor code requirements. The provision being non-recurring item, the PBT of future years could be expected to be better in the normal course. Quarter ended March 2023 stands out as the peak quarter when the revenue was at the top at rupees 693 crores. Subsequent quarters could only report varying degrees of negative growth until the recent quarter of December 2025, which successfully posted a positive year-on-year growth. The persistent fall is attributed to flattish production volumes, particularly in MHCV segment, besides a slowdown in other segments. It was not only fall in revenue but in margin as well across quarters post December 2023 quarter. Recovery in margin is yet to be visible. The fall in margin percentage from a peak of 11.1% to a low of 10.6% is equally worrisome. Better product mix and a superior pricing power have helped to an extent, but the company has not been able to completely reverse the trend of lower margin percentage so far. Benefiting from government focus on road infrastructure development, the mandatory scrapping of old commercial vehicles likely to significantly benefit with a strong replacement cycle. The sector is highly sensitive to geopolitical sensibilities and hence fears of cyclical moderation. Axles for EV segment involve complex technology attracting fierce competition from global giants, has remained a small cap company with a very conservative growth over decades of operations. A major part of its revenue coming from a high concentration of customers enhances volatility and risk. Hope you found this presentation on Automotive Axles to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You may please access similar videos at our info card. We eagerly look forward to your valuable feedback and are highly obliged for your kind time and attention. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.